Hey everyone, this is Ryan Mallory for SharePlanner.com. Today is March 25th, 2013. Doing another session of live charts here. Um, we had a market that gapped up today, completely flushed out the longs and went much lower on the day. And I tell you what, that's typical. Now, oftentimes I'll say that those can wind up being some of the most awfully bearish days that you will ever see is when we gap up higher and then we just start trending lower, fill that gap, and then sometimes they can lead to 2 and 3% down days. The only problem is this market buys every dip. I mean, the algos, the hedge funds, the retail traders, everybody is buying the dip. And eventually that chicken will come home to roost and burn them all. But until then, you got to trade. You got to trade what's working in the market. And right now, buying this dip like what we're seeing here on the S&P today, that's what's working. And 5-minute chart here, huge bounce off of 1446, 8 points higher. We're not that far from being break even on the day. You look over here at the daily chart though, completely different picture. Since March 6th, we have, which is almost about 3 weeks now, we have been trading in a very sideways, consolidated manner. We have not broken out. We have not broken down. If we can break above 1563, which we did just briefly today, we were at 1564, but that did not last, and we came back down. So there was a no-go there. But if we can close above 1564, that will make a huge difference. On the flip side, 1538 is what you're looking at to the downside. We break that, then I think that there's a strong reason to believe that we're going to go ahead and test this lower channel, which we haven't had a true test of this lower channel that currently sits around 1522 since the beginning of the year, which was January. Actually, it was December 31st of last year was the last time we tested this channel line. So we are due we're due for it. And however, that just because we're due for it doesn't mean that it's going to be happening in our time. It could take a lot longer, and the way the market's been acting lately, I would say that there's a better chance that we're going to break out to the upside than we are going to break down in the near term. But ultimately, we will come back and test that channel line. We have to. So there's a lot of people out there. They're trying to call the tops. They're trying to be the heroes out there, and that's a dangerous game to get yourself involved in, because honestly, if that was my strategy, I would be calling the tops, here, and I'd be losing every time. Just trying to call market tops, it will burn you over time. Don't try to have an opinion for when the market's going to top or when the market's going to bottom. Just trade off of what the market's doing right now. And even right now, trying to trade off of what it's doing, it's frustrating, because just when you start getting some momentum, boom, you get a sell-off. You think you get the bounce, boom, you get another sell-off. You get a bounce, boom, you get another sell-off. So the trading's been very difficult, and even over the month of February too. You had this slight push higher than a nasty 4-day sell-off, and at that point it really did look like we were going to go much lower, and then all of a sudden we just ripped the market higher, which is actually just a few points off of its all-time highs now at this point. So be careful on how you're trying to trade this market. Don't try to get too heavily long, too heavily short. Instead, let the market dictate the conditions and act accordingly. Just going over some of the positions in our portfolio. SRPT. This one is held in there like a champ today. And right now, as we're speaking, it's breaking out higher. So that's a welcome development as I'm talking right now. But you can see what I like about this stock so much is that at around $32, this thing is breaking out. It's been consolidating after it broke out, and it's just above that breakout level, and now it's trying to push higher. And the only thing I don't like about it, it's a biotech company. So, if it had a bad piece of news tomorrow, you could lose 10% quite easily on this trade, and you can see how it's gapped up over time. And I would welcome a huge gap up like that. That's for sure. And you never know what can happen with these biotech stocks, but there is a higher level of risk that comes with these, but you just have to know that going forward, that you don't risk more capital than what you can afford to lose. And with with it being up over 4% now, that's making a very, very solid argument that it may want to go into the 35s and 36s and possibly push as high as 40. So we'll see. We'll keep our eyes on this one and manage it like we should. And take what it'll give us. Let's go ahead and look at SLV. Man, we have been holding this stock for a while now, and it's just not. It's not breaking out, and it's not breaking down. Back on Thursday of last week, when we got this, nice gap higher, I thought, okay, maybe that's gonna, lead to the push higher, but it was nothing different than what we saw back on March 12th. So we're a bit in a bit of a holding pattern still with SLV. I don't see a reason to get out because it is forming a nice base, but if it does break below 27.50 at this point, I'm probably going to get out of it. The next stock is GG, and so it has some of that same commodity argument to it. I went ahead and got into this one a bit early just because I wanted to have that tight stop loss on it, and it had a nice base that it was breaking out of, but it just can't seem to get above that downward trend line, and that is becoming a bit of an issue for me at this moment because I don't like the fact that it's struggling so much with that at this time. So there you have it. Those are the stocks I'm looking at, or that I have in my portfolio. Let's look at TLT though real quick. You can see that with the market rallying this afternoon, this stock, or the 20-year Treasury bonds, they sold off as a result of that. Then if you look at the VIX, same exact thing here as the market's trying to rally. The VIX has given up much of its gains on the market's weakness and has come back down to more of a break-even level. A couple of longs, I'm not really trying to pay too much attention to the short side, but a couple of longs I did add to my watch lists today was HIMX. You can see here this one has a nice opportunity to push higher. I'm not a big fan of these $4 stocks, but I know there's a lot of you guys out there that are, so that one you might want to add to your list. If I was to trade it, I would probably play it at 432 in my entry and 414 as my stop loss. The other one is Dish. And I don't want to trade a stock that's had a huge run up like this, going from 34.50 up to 38. But what I do want to see is Dish break out, get above this $38 level, and close above the $38 level, and then maybe spend the next week or so consolidating, working off of these overbought conditions, and then maybe provide us with a good entry to get long on. Sort of similar to like what we talked about with SRPT, with how it broke out and then it consolidated just above. That price point. So there you have it. That's going to be the live charts for today. If you guys have any other questions, feel free to hit me up in the splash zone or shoot me an email at brian@shareplanner.com. Thank you all and have a blessed day.